Hi everyone and welcome to Swissquote's daily market talk. It's Friday, July 18th. Japan will be holding the upper house elections this Sunday. So we will talk about the election scenarios and their possible implications for the Japanese markets and beyond in this episode. But before we do, please keep in mind that opinions are my own and this is not financial advice. So Japanese politics may be unfamiliar to you, but the Japanese yen is one of the most traded currencies in the world, and the Japanese yen is the most used currency for carry trades. As you know, as the currency offers quite low interest rates, encouraging global investors to borrow in yen to invest in higher yielding currencies. Therefore, any major moves in the Japanese yen and in the Japanese yields have the potential to send echoes through global financial markets. Also, the Japanese institutional investors, like their big pension funds or insurers, have quite a heavy weight when it comes to their potential impact on global asset flows. So I thought that it was interesting to dedicate this last episode of this week and the last before my summer break to Japan and their elections this weekend. Now, don't worry, I'm not going to dive deep into the Japanese politics, but rather focus on potential market implications of the upcoming Japanese upper house election results. But first, we still need to have a bit of context for the Japanese politics. So currently, the Prime Minister, Mr. Ishiba's Liberal Democratic Party, LDP, and his junior coalition partner hold a comfortable majority in Japan's upper house, but their position in the lower house is more fragile, with recent elections resulting in a minority government. Support for the LDP has actually been under pressure since a while due to a string of corruption scandals and persistent concerns over the cost of living and rising inflation in Japan. This is rather an ironic twist, mind you, considering that Japan's decade-long battle with deflation has been the major driver of the Japanese yen and the yields. But well, right now, the global post-pandemic inflation surge did not spare Japan either. Prices crept higher, finally pulling the core CPI in Japan above the Bank of Japan's 2% inflation target for a sustained period. So this actually forced the BOJ to gradually unwind its ultra-loose monetary policy stance. So after years of negative rates and yield curve control in Japan, the central bank began its policy normalization journey, culminating in March 2024, when the Bank of Japan raised interest rates above zero for the very first time since 2016. So this weekend's election in Japan comes at quite a very important time, when Japanese long maturity yields are pushing significantly higher on Bank of Japan normalization expectations and budget concerns in Japan. And as I have mentioned in earlier market talk episodes, Japanese investors, especially their big pension funds and their big insurers, are among the major buyers of the US debts and equities as well, and could eventually repatriate their funds back to Japan if yields in Japan become more attractive. So what will happen in Japan could eventually have global financial implications. This is why we are talking about it in this episode, because remember, in summer 2023, the BOJ had adjusted its yield curve control policy, allowing the 10-year yields to rise more flexibly up to around 1% as a reference point, and the latter had actually reinforced expectations of more Bank of Japan normalization, sparking unwinding of Japanese yen-funded carry trades, which in return resulted in a brief but a decent global sell-off episode across the global financial markets. Remember that. So the chances are that the Japanese elections of the Sunday will matter for risk appetite in the coming weeks, and the recent surge that we see in the Japanese yields and the trade tensions that are ongoing with the United States aren't helping, adding some extra sensitivity to Sunday's election results. Now, what we'll do is quite a simple scenario analysis here. We will try to project how could the Japanese equity and bond markets and the Japanese yen could react to two different election outcomes and their potential global implications, potential global implications of these election outcomes on domestic stocks in Japan and on currency moves. In short, we will be considering two scenarios. First one is the LDP maintains its majority, and the second one, well, they lose their majority in the upper house. So in the context of the first scenario, if the LDP maintains its majority in the upper house in Sunday's elections, things will be quite easier for investors because investors like stability. So continuity in leadership will likely be seen as market friendly, as it will support the ongoing fiscal stimulus and reform policies. In Japan, as such, equities could rally mildly, especially if the outcome reinforces confidence in fiscal expansion and defense build-up plans. As such, the Japanese defense, construction, infrastructure, and green energy, and also the technology sectors would be potential winners, even though higher yields, I'm going to talk about later, could actually tame the rally. And in the opposite case scenario, if LDP loses its majority in the upper house, things might look a bit more complicated, because indeed, this outcome would introduce a higher degree of political uncertainty and could delay key policy initiatives in Japan, particularly those around fiscal spending and defense. So the latter would be a sign of weakened political continuity, obviously potentially weighing on Japanese equities, especially on sectors that are seen as policy sensitive, as defense, infrastructure, green energy, green tech, etc. Utility and exporters could particularly be vulnerable. For the JGBs, so yields have been rising on fiscal expansion expectations. As I said, a weaker LDP result could hence temper these expectations temporarily and support JGBs and push yields lower. But the long-term structural shift toward higher global yields would likely cap any meaningful rally in JGBs and, well, throw a floor under any weakness in the yields. A post-election sell-off in JGB, so a potential surge in JGB yields in case LDP maintains its majority, on the other hand, could spook global risk sentiment, especially if it sparks concerns over Japan's debt sustainability. And the rising Japanese yields could expand to Western markets. They're also quite sensitive these days and pull the trigger for a potential global risk sell-off. And as per the Japanese yen, it may actually appreciate in a risk-off scenario. Here, the risk-off scenario would be the LDP losing its majority in the upper house, but the appreciation should remain contained due to limited upside pressure on the Japanese yields in this particular case scenario. Remember, if LDP loses its majority, the yields could soften in Japan on expectation that the Japanese government couldn't follow up with ample fiscal spending plans, and that's not very positive for growth either. However, if the LDP retains its majority, we could see the Japanese yen weaken due to risk on outflows here, in which case we could see the dollar yen supported, even though the yields in Japan could come under some positive pressure and tame that upside potential in the dollar yen. And beyond the elections, tariffs obviously add some two-sided risk to yen trading as well, because they could hurt Japan's trade balance and weaken the Japanese yen, but also trigger safe haven flows into the Japanese yen. So it's a bit confusing due to Japanese yen safe haven currency status. So far though, the yen has remained behind other safe haven assets like gold and Swiss franc in amassing safe haven flows during the trade tensions. Therefore, the carry trades in the yen remain in place for now. Uncertainties keep the BOJ talks at bay, and if the developments don't trigger any reversal in carry trades, impacts on global markets should be limited. If not, well, reverse carry positions in the Japanese yen would threaten the global risk appetite. So we will keep an eye on the Japanese elections, but this is all for this week. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. Now, I will not be here for the next 2 weeks, but I prepared a series of education videos on inflation, market positioning, and ETFs to keep you busy. So I'll let you have a look at these videos and see you soon.